888-338-3310 and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Uh-huh. Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 14th day of October, 2015. Well, how about that Walmart? I told them if they didn't bring back the Cambridge button-down collar Oxford shirt, this was going to happen. We'll talk more about that later in the show. Okay, let's look at the numbers. How about that? Oh, happy Wednesday. Yes, that's true. In some time zones, hump day, you're over the hump, middle of the week. Those of us on West Coast time, we got a few more hours, and then we'll be on that downward slide into the weekend. But for now, just happy Wednesday. All right, the S&P 500 cash markets are down 7.5 points. Dow Jones Industrials are down 112 points. NASDAQ is down 12. Russell 2000 is down 6. Crude oil is down 49 cents. Gold is a bright spot, up $12.10. Now, in the Asian markets and the European markets, I got no good news for you unless you're short the market. The Nikkei is down 343 points. That's almost 2%. Shanghai is down 31 points, and believe it or not, that's almost 1%. Hang Seng is down 160 points. And in the European markets, all red again. DAX down 116 points, over 1%. FTSE down 72 points, over 1%. And the CAC 40 down 34, which is just under 1%. So a lot of red going on. In fact, where's the green? Gold and natural gas and silver. And that's about it. Oh, and the VIX. The VIX is green. So, and the Euro-USD currency pair, that's green. You know, I threatened to fire the euro yesterday because it had been so flat the last couple of days. In fact, we didn't even have a trigger yesterday. So officially on air during the show yesterday, I said I think I'm going to fire the euro and replace it with something else. And so today it snapped to and actually gave us some movement. So yes, you can thank me for that. All right, moving right along. Walmart, really the big story. And it's so big that I haven't had a chance to fully digest it. So here's what we're going to do. Michael will come right on in, and he'll do a recap of everything that happened in the live trading room today. He'll cover the good, the bad, the stuff that got away, and he'll answer any questions that you have. Questions about the live trading room, questions about how to take the free trial, questions about how to become a partner now that you've already been on the free trial for a week or however long it's been. He will take you through each market, through each trade, answer all your questions. And then when I come back, at some point during the show today, we'll talk about Walmart. We'll also talk about the free trades. Our free trade from last night. But you got to follow the directions, okay? Now, I got a couple of emails, and turns out both people I got emails from, they said, hey, I keep waiting on this free trade to show up, and I didn't get it. And I said, go look in your promotions folder. If you use Gmail, you may not even know you have a promotions folder, but it nests underneath your inbox. If you hover over the inbox just a certain kind of way, it'll drop down, and one of the folders there is called the promotions folder. And what that means is anytime their servers can detect that an email was sent out to a large group of people as opposed to being sent, person to person, they consider that to be some form of promotion, right? And so to help you achieve inbox zero, which we all know is never going to happen, to make your life easier, they put it in the promotions folder. So see, the way it works is first you go to the CFRN.net/free-emini-trades. I'm going to give you all this in the chat box in a bit, so don't worry about writing it down. That sets the first auto email in motion. That's where you have to say, yes, I do hereby swear that I actually requested this, because we hate spam as much as you do, so we use a double opt-in process. Okay? Once that's all been cleared up, then you'll get an email that says, okay, now go to our website to this registration page and actually register for access to the free trials. Once you do that, you're going to pick a username, you're going to pick a password. You're going to click the link in the email, and you're going to go back to our site, and you're going to use that username and password that you just user ID and password that you just created. It's going to log you in, and like magic, it's going to take you to the countdown page where there's a very officious looking countdown timer that says the next free trade will be released at this time. Okay? And then it counts down minute by minute, second by second. And at that time, and last night the time was 7 p.m. Eastern. Now, people knew that the next trade was going to come out Tuesday night at 7 p.m. They knew that Monday morning, I think, was when I put it up, right? So by looking at the countdown page, you always know what the current trade is, what happened to the most recent trade, and when the next trade is going to appear. So unlike the Concierge Trade Alerts, which actually show up in your inbox every night, I designed this a little bit differently, where you know at exactly what time you can go to that web page and bang, there's your free trade. Based upon the success of this model, and once everybody gets the hang of it and the swing of it, I might even do the Concierge Trade Alerts the same way, which that's a huge commitment on my end because I got to make sure I have them all done and that they are posted by the appropriate time. So right now we're 2 days into me getting this. I got it posted Sunday night on time. Last night I had 15 seconds to spare. Got it posted. It was flawless. So pray for me and I'll pray for you and we'll see how this works. So if you've been waiting for that free trade to show up in your inbox, that's not going to happen. But go check wherever your email client plays hide the important stuff. Could be in the bulk folder, could be again in promotions, could be in, it might even get into spam, I don't know, or trash, or who knows, based on your email client. Now, one way to fix that is to add support at CFRN.net as one of your email contacts. And if your client allows, say it's a trusted contact or give it a high priority, and then anything that comes from us will always go, it'll rise right to the top, okay? So, I hope that helps. If you're still having a trouble or a struggle, support at CFRN.net or call us up 949-42-EMINI. And if you need to get a hold of us during the show, like right now, call toll free 866-928-3310. Bert or Leslie One will be more than happy to try to help you answer any questions that you might have. And then as soon as the show's over, of course, Michael and I will be more than happy to sit and chat with you about whatever it might be. So with that, Michael, I'll hit mute. It's all yours.
Okay.
You know the drill.
I do know the drill, and I put those links in the
oh, cool.
in the chat box already.
Awesome. Thanks very much. And guys, as you can see on the S&P 500, we did break out of that little box, remember? And I'll talk to you about how it came back. We'll talk about that later. Let's let Michael do the recap.
Okay.
David, of course, will be with us top of the hour. Forecast from the Edge. We'll cover the trade alerts from last night. Good word for the day. Huge show. As Ed used to say, we got a really big show coming up. So stay tuned, and I'm going to hit mute.
Okay. All right, I'm going to hit record. Here we go. All right, good afternoon, everyone. Today is Wednesday, the 14th day of October 2015. Let's see, to take a free trial with us, just go to CFRN.net, the homepage right there, the homepage, and right over here in the right-hand column, put in your name, put in your email, click on register for a free trial. When you do that, you will be sent a confirmation link click the confirmation link. If you don't click the confirmation link, you will not get a free trial. So make sure you click that confirmation link, all right? That's it. That's how you get it. Then you'll be sent all the information you need to get 5 luxurious days in our live trading room. All right, the results. If you click there, and then click here, this wonderful spreadsheet will pop up, and scroll all the way down to the bottom, and you will see today. All right. Today we lost 4 ticks in soybeans, we made 50 ticks in the Russell, we made 12 ticks in crude, and 14 ticks in gold. We were up 8 on the ES, and then we gave it back in 1 trade. Okay. Today it took us 13 minutes and 4 trades to get to our goal for the day, and we took a total of 30 trades today. That was a lot of trading. Let's see, so on the month, that puts us up $3,702.50 over 10 trading days. That averages $370 a day. If you were to apply an $8 commission to every trade we've taken, you would be up $1,998. If you were to apply a $5 commission to every trade we've taken, you would be up $2,637. Those are net numbers after commissions and fees. On the year, we are now up $51,635 per contract. That's over 192 trading days, averaging $268 a day. That is 1 contract, 2 hours, $268. So it's averaging $134 an hour this year, working 2 hours a day, $134 an hour. The beauty of this is if I wanted to earn $1,340 an hour, I would just add on 9 more contracts. Simple as that. All right, enough of that. Let's get into the actual trades here. On the gold, we had some trades here on gold today. We started out right in here by missing this first trade. I was a couple of minutes late this morning and ended up missing the first trade. I grabbed the second one right here. The second trade I got on gold is 1 tick profit. Third trade, 1 tick profit. So at that point I was +2. Then I got nothing on this one. And actually, I think, yeah, nothing on that one, nothing on that one. Then I got 7 ticks profit, I think, on this one over here. Right, 1, 2, nothing on that one. 3 ticks profit here, putting me at +10. Oh, wait a minute, something's messed up. I missed a trade in here somewhere. I don't know where it is though. Anyway, we had 1 tick profit. 1, 2, 3, 4, 5, 6, 7. Yeah, there's 1 trade missing in here. We had 8 trades total on gold. I don't know where it is. But we had 1 tick profit here. It didn't put in a higher swing, so we had 1 tick profit here, putting us at +2. Then the next trade, we had 7 ticks profit. That must have been right here. Right here. We had 7 ticks profit on that one. And then we had 1 tick profit putting us at +10, then 2 ticks profit putting us at +12, a break even, then 2 more ticks putting us at +14. That's what it was. Okay. During the break, gold flattened right out. Nothing in here. Okay. So that was what we did on gold. Look at the Russell just going back and forth across the BBC. Like it doesn't even care. That's just not right. Let's see what we did on the Russell today. Our first trade on the Russell was right here. It was a break even. Second trade was right here. It was +4 ticks. Third trade +5 ticks. So we're at +9. Then I missed this right up in here. I took this because I didn't know I was in a zone at the time. I got 1 tick profit on that, putting me at +10. Then over here, 5 ticks profit, putting me at +15. 5 more ticks, putting me at +20. Then a break even. Then 4 ticks, putting me at +24. You can see all the trades that I missed in here too. Yeah, we had great volatility today, John. It was nice. I'm scrolling, but it's not moving. There it goes. So from plus 24, we got 6 ticks profit on this one, putting us at plus 30. 10 on this, plus 40. 10 on this, plus 50. And that was where we ended with the Russell today. Nice volatility. Okay. Let's see. In here we had, during the break, there was a long trade right in here. A long trade right here that didn't go anywhere. A short trade right here. Didn't put in a lower swing, change of direction. Long trade right there. Would have been a break even. And scrolling again. And it's not going anywhere. There we go. Yeah, this was the short trade. There was the long trade there. Would have been a break even. Didn't put in a higher swing, so I wouldn't have taken that. No trade in there. No trade in there. No trade in here. No trade in there. No trade here. Heck. That was it. That was it on the Russell. We ended with plus 50 on the Russell. Okay. Now, crude oil, we ended with plus 12 on crude, but we started out with minus 8 right here on crude. Okay. I think we had a break-even trade. Then I missed the long trade right here. Got this short right here, and it stopped me out minus 8. Got a little bit back here, 4 ticks. That put me at minus 4. A break-even over there. Then I got 9 ticks profit here, putting me at plus 5. A break-even there. Then 7 ticks profit there, putting me at plus 12. And that was where I ended it on the crude. Now, during the break, there was a long trade here. There was one here, but I wouldn't have taken it. Once we broke dynamic resistance, then I would have taken the long trade right there. I wouldn't have taken that. That was pretty much it. That was it during the break. So we ended with plus 12 on the crude. The soybeans, let's see, we had these 2 trades. We started out here with minus 8 ticks. Then we nailed this one right here. No, it wasn't too bad, John. Then we nailed this one right here for 4 ticks profit, putting us at minus 4. Missed that one and missed that one. During the break, there was this trade. Well, if I drew a trend line, let me just draw a trend line for you. It was a trade from right here. It was a momentum long trade. Went right up to dynamic resistance and stopped. Okay, that was it during the break. That was soybeans. On soybeans, we were minus 4. On the ES, we had a few trades. Let me show you those. All right. First trade was right here. It was break even. Then we had 4 ticks here and 4 ticks here, putting us at plus 8. I missed this one. Nothing in here. Okay. Then finally, when I did have an opportunity to grab a trade, I did right there, and it stopped me out, minus 8 ticks. Then there was a shorting opportunity here that I missed, and that was all that we did in the live trading room this morning. And there was a long trade here that didn't go anywhere. Would have stopped you out. A short trade over here would have been a break even, and a long trade right here. That would have worked out pretty well. Okay, and that was it on the ES. So we were break even on the ES. All right, so let me bring this back up. On the day, we were minus 4 on the soybeans, plus 50 on the Russell, plus 12 on crude, plus 14 on gold. It took us 13 minutes and 4 trades to get to $100 a contract, and at that point, we took a total of 30 trades today. I'm sorry. On the month, we are now up $3,702.50. On the day, we were up $710, I think. Yeah, $710 on the day. Okay. On the month, $37,0250 over 10 trading days. We're averaging $370 a day. On the year, $51,635. That's over 192 trading days, averaging $268 a day. Okay, $268 a day. And that's it. All right. Again, let's go back this way. if you have not taken a free trial with us, go to CFRN.net. In the right-hand column, put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. You must click the confirmation link, okay? If you don't click the confirmation link, you don't get the free trial. All right? And that is that. All right, guys. I guess I can head back out to Phoenix. We're running a little late today anyway. We started a little late, so I'm going to stop the recording. There. All right, that's one recording. And Dwayne, if you are available, we can head back out to you.
Why, yes. Yes, I am. And
Okay.
I will take control of the charts momentarily. Just a second.
Excellent. Okay.
Coming right up. I just need to get logged in, I think. Oh no, this will work perfectly. Okay. All right. Okay, I'll grab the charts.
Okay. All right.
Okay. And okay.
I can see your charts.
Okay. Now, I used a terminology last night, a term that I don't use a lot, hubbub. I said, if you want to know what all the hubbub is, bub, email me and I'll let you know. Just so, in case you don't know, hubbub, which I was referencing the free trades that we're giving away. It's a chaotic den caused by a crowd of people. There was a hubbub of laughter and shouting. See, I used it in a sentence. Huh.
I see. Huh.
It's a busy or noisy situation. She fought through the hubbub to get to that free trade. See? That's the deal,
Clever.
bub.
Clever.
So that's what all the hubbub's about, bub. All right. Now, again, you go, well, you go here. You go to free mini trades, all right? And you're gonna get all set up, and you're gonna register. And once you do this, you got to confirm, okay, that you really want to do the deal. Okay, and then it's going to take you to a page where you can actually assign your own username and password so that you don't forget, right? Then after you've given yourself a username and password, you'll be able to log in and see this page. This is a password protected page. It has been 17 hours, 40 minutes, and 55 seconds since this trade was issued. Okay? Now, before 7 p.m. Eastern last night, this said the next trade alert will be issued in 5 hours, 4 hours, 3 hours, and it counted it right down to the second, and then this appeared. This video recaps the Concierge Trade Alerts for the last 2 days and talks about the free trade concept. Okay. And, of course, we'll kind of keep a running record here. The last trade was on the ES. These were the results. Here I kind of highlighted them all out for you, what each swing happened. One of the swings got stopped out, and so I duly noted that. And there's a link, and it says here that the next free Emini trade will appear on this page at 7 p.m. Eastern on Tuesday. Now that was last night. So see, now I've got to change this, and up here, right under this, as soon as I'm done with the show today, I will put in when the next free trade will appear. Sunday night was 7 o'clock. Tuesday night was 7 o'clock. Now, per the Free Trade Manifesto, you'll get 3 to 5 trades per week. This is not any kind of a replacement whatsoever for the Concierge Trade Alerts. Okay? Our Pay It Forward free trade program is not a substitute for our Concierge Trade Alert service. Free trades will be picked at random and emailed hours before the expected trigger. Oh, I got an error there. Oh, that was before I had thought the whole process through. And will appear on the countdown page hours before the expected trigger. There you go. Work in progress. I am a work in progress. Can I edit this page from here? No, because I don't think I'm really logged in. Maybe I can. Psh, fancy that. Live in real time. Okay. So I'll just come down here and I'll clear the air once and for all. That may be where some confusion came in. I bet it is. Some of you guys have got confused because I confused you. And so, please accept my apology. Free trades will appear on the countdown page. Free trades will appear on the free countdown, on the free trade countdown page hours before the expected trigger. Sweet. Sweet. Okay. So that's where some of you got confused. I confused you. Not intentionally. I would never do that. But get busy, because here's what happened last night. See, last night the trade said, consider being long the 30-year bonds, 158.19. Now, bonds pay 31.25 per tick. There are 32 ticks to a point. Goals. Well, we did. I'll go to goal in a minute. Bonds. Okay, so again, it said long above 158.19. Oh, sometimes they just or a hort below or a hort below 157.12. I need my glasses checked. That's obviously, I know that confused some people too, but it should have said or short below 157.12, whichever presents first. And again, in this little video here, I explained to you the reason behind giving you a long and a short trade. All right. I have an opinion of which way the market's going. Anyone who's been looking at charts for any length of time, you look at a chart, oh yeah, we're going up from here. Oh, we're going down. But I've been wrong before. Okay. And so I'm going to give you the very best trade I have in the direction that I think it's going to go. But just in case I'm wrong, I'm also going to give you the best possible trade I can if I'm wrong. So you get the best of both worlds. You're never left without a decent trade. Okay? Okay. All right. So last night we trigger 158.19 and we get up to 159. With 32, if I did the math right, I don't think I did. 32 minus 19. 32 minus 19 equals, so the first leg up was 13 ticks. All right, and so 13 times 31.25 equals 406 and a quarter. So that was a $400 move. Now, here's what I can't do. I can get you in here, right? But I cannot get you out at 159 exactly. Was that the swing high? 159. Yeah. I cannot get you out at the exact swing high. I can teach you how to set a fixed target. Now, if you're trading the 2420 blueprint, you only need 4 ticks because the bonds pay 31.25 per tick, so you just need 4. So you can set a hard target at 4. You know, if you've graduated beyond that, maybe you're trading multiple contracts now, so maybe you want to layer it out, you know, take off one at 4, take off another, however you want to do that, okay? Or maybe you just want to trail your stop. And so it goes up to 13, and then it comes back and takes you out with 8. Nothing wrong with that, all right? Become a partner, and we'll teach you all the intricacies of how we do this, okay? Now, important prices, important areas are almost always tested. So what does price do? It comes back down, gets below the trigger, and takes off again. This time it runs 23 ticks. So 23 times 31.25 equals $718. So again, the potential for $1,100 plus between the two moves was certainly there, but again, I can't get you out at the exact swing high. You, by trailing your stop, can get yourself out as close to the top or the low, swing low, based upon how far you trail your stop. Okay? Now, there's other things that I've taught you, and as a partner, will teach you Fibonacci price extensions, you know, support and level. You know my belief that that's not broken, right? And so we'll continue to use that as well. Michael, are there any unanswered questions in the chat box? He's on the phone. Okay. All right. Let me open the chat box and just see for myself. Let's see. Yeah, George, when you're going for larger targets, you are going to need a larger stop. And if you've already got your goal for the day, chances are you don't even want to mess with that because this is money in the bank. But different people, you know, and you can trade it on the trigger, or you can trade the way we teach you how to trade, which is to break it down to a 4-tick range. You can use the standard slingshot setup to take your entry. You can take it on the queue, okay? You can enter, get stopped out. We use a 4-tick stop on bonds. So if you get stopped out, you get a chance for a second entry. If you even get stopped out twice, you're down 8 ticks, right? If you run the CFMA1, the backbone of the indicator set, the way we've been teaching everyone in the workshops, the partner workshops, the last couple weeks. Guys, if you haven't watched those videos, go watch them. It's going to open up a whole, you're going to see everything a little bit differently, all right? So check that out, because these are the good old days. Inside Futures, I wrote an article yesterday, and if you haven't had a chance to read it because the word is good, okay? And we've got more volatility on the way with this presidential cycle. So there'll be a day when the markets get kind of, you know, flat again, and you'll be thinking, man, I wish I had taken advantage of some of that volatility when I could. So if you can, don't rush though. Don't push yourself. Don't get ahead of yourself. Don't jump out in front of an oncoming train. One contract at a time till you're consistently profitable in SIM, and then increase your account balance by $2,000 before you add another contract. Don't rush it. Oh, I got to hurry up and go to 10 contracts while there's still lots of volatility. Don't go down that road. You'll get hurt. Okay? Okay. Rick, I did not receive my trade alerts last night. I confirmed the confirmation leak. Maybe I signed up too late. I don't know. Maybe Rich, oh, you probably typed that in before I just explained everything. Okay. So, John B., I got a heads up email 2 hours ahead of time. Yeah, I think I sent out an email yesterday just to kind of touch base with everybody and remind them that the free trade would appear in 2 hours. Yeah, I think I did. Okay. All right, good word for the day. We want to get that done. So we got to go to Vegas in 8 minutes, talk to David. And then today's Wednesday, and so my Wednesday co-host, Jim White Bar Cox, as far as I know, will be here with me at 1:30. But we'll get the alerts covered, stem to stern, each and every one. We've been talking about thinking creatively for the last 3 broadcasts. That was our discussion. We're going to move on to something a little different. The deal is sealed. Ephesians 1:3. Having believed, you were marked with a seal. Okay, here's the full passage. And you also were included in Christ when you heard the message of truth, the gospel of your salvation. When you believed, you were marked in him with a seal, the promised Holy Spirit. If you're having doubts about your salvation, understand this clearly. The moment you trusted in Christ as your Savior, his blood cleansed you from all sin. At that point, you are marked with a seal, the promised Holy Spirit, guaranteeing your redemption. The Bible says you should not be like a cowering, fearful slave. You should behave instead like God's very own children, adopted into his family, calling him Father, dear Father. For the Holy Spirit speaks to us deep in our hearts and tells us we are God's children. And since we are his children, we will share his treasures. For everything God gives to his Son, Christ, is ours too. That's Romans 8:15 through 16. So you have not received a spirit that makes you fearful slaves. Instead, you received God's Spirit when he adopted you as his own children. Now we call him Abba, Father. For his Spirit joins with our spirit to affirm that we are God's children. In the book of Ruth, we read, the custom in Israel concerning redeeming was one man took off his sandal and gave it to the other, and this was a confirmation. Notice the Redeemer put on another man's sandal, signifying his willingness to stand in his place. That's what Jesus did for us at the cross. He stood in our shoes so we could stand before God in his, redeemed and righteous. So don't let doubt steal your joy. Refuse to go by your feelings. Feelings will mess you up. Make up your mind to believe what God says, for until you do, you'll be plagued by uncertainty. Study God's Word until you can say with assurance, 2 Timothy 1:12. Study God's Word until you can say this with assurance. I know whom I have believed and am persuaded that he is able to keep what I have committed to him until that day. So the question, are you trusting Christ as your Savior? Then your salvation is not in doubt. For if you trust, then the deal is sealed. And that's our good word for the day. All right. S&P 500. Emini Futures. We had an alert last night. Said to consider being short. Well, it said to consider being long above 2001. Okay? We got all the way up to 2001.75. I need one of those game show buzzers. Because 2001.75 doesn't do us any good. If you're trading the 2420 blueprint, it's at 4 ticks you move your stop to break even. This was 3 ticks, and so 2001 is right there, and that's 2001.75. So no go. Now down here, consider being short below 1988. All right. We dropped to 86.50. We want to see 86. We saw 86.50. That's not 8 ticks. That's 6. However, whereas this did not give us that 4th tick to move our stop to break even, down here, you got a chance to take your stop to break even. Then, important prices, important areas. Okay, we drop again. Now this time is a little bit better. We got all the way down to 85.25. So that's 2 3/4 points. Okay? Then we get back above and we drop one more time. And this time we get back to 86.50 again. So all in all, the S&P, nothing to write home about. Bonds, we just covered. Crude oil, also, yeah, not so hot. Long above 46.90, and the high was 46.96. So if you're trading the blueprint, does that get your stop to break even? It does. If you're using a greater stop to look for greater profits, then you got stopped out. Down here, okay, more of the same. 46.05 dropped to a low of 46.01. It's 4 ticks. Here, we dropped to a low of 45.95. That's 10 ticks. In crude, that's actually what you need is 10 ticks. And then here, this was actually a continuation move here. So we don't really have anything here. Now, crude's been very good to us. I mean, we've had, go back 2 days, Monday, Columbus Day, short below 49.05. This baby dropped $1,000, then $2,000 per contract. We were at beautiful two-sided action yesterday. We could trade it short, we could trade it long, we got to trade it short again. So, these days, gonna happen. Time to go to Vegas. We'll talk about gold after we finish talking to David, and we'll cover all the other alerts. Gold in particular last night was, well, you know what? I sent out a message. I put it on the Google Plus, and on the Russell, I actually walked you through a little bit different way of trading it. So maybe you had a chance to read that. If you were trading 3 contracts or multiples of 3, where you might take 1, might take 2, might take 3, we'll go through that. Some good stuff there. Okay? Well, he humbly says, I think it's good stuff. You tell me. All right. We're going to pause for a brief station identification, and we'll be right back with David from pagetrader.com. So don't go away.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
You think we don't need you now, be on your way. I thank the Lord for love like ours that grows ever stronger. And I always will be true. I know you feel that same way too.
Good morning, Dwayne.
Hey, David, good morning.
Well, welcome to the show. Took your line from you.
There you go.
I'm ahead of you today.
How are you, man?
I'm good. I'm just keeping an eye on these markets and marveling that we all can take advantage of them one way or the other. And it's the Wild West. You know, it's one of the few last things that we can do that are, even though they're regulated, for the most part, they're free markets, and we can get in them and trade them and so on. So,
yeah,
really love that.
Yeah. So today, when somebody says, "So how you doing?" The answer is better than Walmart. Hopefully.
Well, what happened to Walmart?
Hopefully, you're doing better than Walmart. Oh, it's the big story of the day. It's the fourth worst trading day in 20 years. Walmart just sent a warning shot across the retail world. On Wednesday, the retail giant cut its profit outlook for the next 2 years, forecasting an earnings decline of 6% to 12% in 2017 at its annual Investor Day presentation. In response to the news, shares of the nearly $200 billion company fell as much as 9% in morning trade, the biggest single-day decline in at least 6 years. This drop took about $18 billion in market cap from the company. Now, that's one heck of a haircut. But the thing about Walmart's announcement that should have the rest of the retail world concerned is that this profit cut is really about one thing: wages. Now, I disagree. I told them if they did not bring back the Oxford button-down collar shirt, the Cambridge Classic, if they did not bring that back, this could happen. But no one listened. And so here we are blaming it on, well, we got to pay the employees too much, you know, like they want to eat and stuff. Well, all right. Fiscal year 2017 will represent our heaviest investment period, according to Walmart's CFO. Operating income is expected to be impacted by approximately $1.5 billion from the second phase of our previously announced investments in wages. Now, that's a very nice way of wording that. You know, it's not a cost, it's an investment in wages and training, as well as our commitment to further developing a seamless customer experience. As a result of these investments, we expect earnings per share to decline between 6 and 12% in 2017. However, by 2019, we would expect that earnings per share to increase by approximately 5 to 10% compared to the prior year. So let's take a look, at the chart. Go ahead. What were you going to say?
I was just going to say, I hope Walmart is given credit for, doing this. These, people, there's been a lot of screaming and yelling about their methodology to keep away from, paying the insurance on various people and so on. But here they are investing in their employees, and this is causing them a lot of grief. I sure hope the people that chase Walmart around and cause them so much grief give them some break based on this.
So that's one big red candle. This is a daily chart of Walmart. It's not the end of the world. Walmart will bounce back. I mean, I think if you live in a major metropolitan area, you're never more than 5 miles away from a Walmart. I think that's how the story goes. And that's not just in America, but I mean, they've penetrated into, other countries. I don't know how many countries they're in now. But so, I mean, they did the right thing. They decided under much pressure. They fought, but
years of pressure.
Yeah, years of pressure, and they finally caved and said, okay, all right, we're gonna go ahead and do the right thing, and that's what they did. And so now shareholders, they're going to get their dividend cut a little bit, or whatever. I mean, this will pass. This too will pass. What they need to be worried about is how they're going to deal with competition from Amazon and this same-day delivery. Are they going to try to compete in that space? Because if they are, that's going to cost them money. Uber has launched a delivery service, which it's so cheap. I don't even know how. I think Uber's $7 for a delivery, and then there's some other. It's an app, and you want something delivered. You can get things delivered for as low as $2.50. Now, obviously, they're able, because of the cell phones and because of the geolocators in there, and there's a guy who's only 2 blocks away from you, so it's only going to take him 10 minutes to go to the store and get, but even still, how do you do that for $2.50? I don't know. I mean, but they're doing it. And so now Walmart has said in the past they were going to compete with Amazon. I don't think they're really ever going to try to compete with this Uber delivery thing. That's sort of a niche thing. But the Walmart, the Amazon is a real threat, because we go to Walmart to get groceries, toilet papers, and big screen TVs. But Amazon will bring toilet paper, groceries, and big screen TVs right to your door, sometimes the next day. And if you're a Prime customer, they won't even charge you to deliver it. That's a tough one to beat. And how long can Amazon keep doing that with the thin profit margins that they have? I don't have the answer to all these questions, David. Perhaps you do.
Well, I think Amazon's been around for quite a number of years, and it has been right up there with Walmart, and Walmart's had some great years recently, even with Amazon. Walmart is up until Amazon, Walmart was the one place you could go where Walmart really makes an art out of getting prices down. They beat suppliers into submission. They're not just cutting their margins at Walmart, they're cutting the margins of their suppliers. They go to the supplier and say, if you want to have your product at Walmart, you have to discount it more than you would normally, and in many cases make practically nothing on it in order to have your product at a Walmart.
And so they do the price matching thing too, David. If you want to buy, let's say some other market down the road has tomatoes for some really loss leader special price, all you have to do is bring in that flyer that you get in the mailbox, the snail mail. You know, it's one of the few things we still get in the mail now are those grocery store flyers. If you take that with you when you go to buy your groceries at Walmart and go over here at Food City, the tomatoes are 20 cents a pound or whatever, no questions asked, they just price match it.
Yeah.
And you can really shave a lot off your bill, and that costs money for them to do that.
Yeah.
So
this is the beauty of capitalism. I mean, honestly, these are people competing to give individuals a wide range of choices and a wide range of discounts, so that the average person has a tremendous amount of choice. He has a tremendous amount of discounts that he can pick things up. It's beneficial to consumers. Last night on TV, we had Bernie Sanders up there. We had Hillary Clinton up there. I have to tell you that I think most people, I watched about 15 minutes of it, and it really just didn't interest me. It was very boring compared to the Republican one. And by the way, isn't it interesting that on the Democratic side, you can really see that, first of all, you had 2 complete no-names up there, whoever their names were.
Right.
They had zero chance. You wouldn't know them if you saw them again. Mm-hmm. If they served your food, you wouldn't know who they were. Then you have Bernie Sanders. It's really just between Bernie Sanders and Hillary Clinton. That's our choices on the left. And Hillary Clinton probably, I kind of read this, she probably won the debate.
Yeah.
last night. That's what they said. I only watched 15 minutes of it because it really just didn't have any interest for me. It just faded off. But it is interesting how many really sharp guys there were running for the Republican side. I mean, I really think it was a much more interesting group of people. They're going to have to be shaved down to the final few people that are going to be in there. But our choice is Hillary Clinton, a tired political hack who's been around for a long, long time with her husband, who has done every single political trick in the book. She is as enamored in the Washington political system as any other person could possibly be.
She's the good wife. I mean, in fact, on the TV show The Good Wife, who she is the perfect example of. I mean, that story, that TV. I mean, in Chicago, the state's attorney, he goes to jail for I forget what now. He was involved with prostitutes, and the good wife stood by him when he went to jail. She went back to work as an attorney. She had put her career on hold. She stood by him. He gets out. He gets elected back to the state's attorney's office. Now he's the governor. And now on this TV show, he's being groomed to be Hillary Clinton's vice president. That's how TV has evolved over the years. I mean, how current. Remember, the first time you heard a current song on a TV show, it had to be like a jolt to your senses. Wait a minute, that's a number one song, and I'm seeing it in a TV show. How do they do that so quickly? But anyway, this is the review she got last night. Now, I only saw just a few minutes of it. In fact, I saw it afterwards when they were talking about it and showing sound bites and clips on Fox News. But her performance last night, flawless. And I gotta admit, I've seen some pictures of her of late that weren't so flattering. And I understand she has a, top-notch makeup team and all that. But she looked
well
good
last night.
Put together. She looked experienced, like the Hillary Clinton of debates past, like Beyonce even. I said that out loud. I'm just reading it, though. Clinton, the Democratic frontrunner for president, was the near universal pick of media and pundits, declaring her the winner. Hillary Clinton was Beyonce. She was flawless, and somebody somewhere got a chill down their leg, I'm sure. By many accounts, Tuesday night's performance was the best day of her campaign. Now, this comment that Bernie Sanders made, the darkest cloud hanging over Hillary's head right now, aside from Benghazi, is the whole email gate. And Bernie goes, my God, or my goodness, or whatever, enough with the silly emails. Let's talk about things that are really important to America. Forget the emails. So here is the guy running against her, and this is like the heaviest piece of ammunition. He's got to, fire a salvo at her, and he defuses the bomb. He says we should just forget about it. That sounds a little like somebody, I don't know, whoever the shot caller is, at the DNC, the Democratic National Committee, maybe they've told Bernie, we'll make you president someday, but not today. You got to act like you want to be president, but we're going to put Hillary in this time. So, I don't know. I mean, that just was shocking to me to hear him say those words.
Well, that's interesting. I didn't see. I know that happened, but I didn't see the actual event of it. But either way, it's just interesting. We're already down to the real two candidates in the Democratic side. They're really betting on Hillary, and Bernie Sanders has a remarkable following for what he's presented and so on, and people really do genuinely like him. And we'll see. We'll see how this all shakes out in the end here. we've got quite a bit of shaking out to do on the Republican side as yet. So we'll see. Very interesting, but I didn't find it really interesting to watch it last night. Honestly, there just wasn't a lot of stuff there. I don't know why, but it just seemed boring to me to listen to them answer the questions. They certainly weren't as hard questions as the ones were on the right, but, fair enough. They did it the way they wanted to do it.
Two other moments define Clinton's debate performance. First, when she took Sanders to task for his support of a controversial gun measure that has garnered him criticism from Democrats on the campaign trail. She was asked point blank by CNN moderator Anderson Cooper if she thought Sanders had gone far enough to stave off a rash of gun violence. She said no. She was poised, she was passionate, and she was in command. That's from David Axelrod. If I were her campaign manager, I would be thrilled with what she did tonight. And Bernie's exact comment, where did that go? Bernie said, he used the D word, close your ears if you have children in the room. The American people are sick and tired of hearing about your damn emails. That's what he said. It's... Anderson Cooper grills Hillary. Will you say anything to get elected? Well, of course. Any of them will. All right. So you promised the good people of Emini World that you'd go straight to the markets today because we got tied up yesterday and went sideways. And
well, we certainly haven't delivered on that yet, have we?
So
let's do that.
Yeah, let's do that.
Yeah, let's talk about the S&P. Yeah.
Okay.
Couple of interesting things. First of all, somebody has, who is it? Someone has an October 13th date for the big crash, or do you know about that? Have you heard about that?
I'm sure somebody in the audience. I'm not.
If somebody in the audience can remind me, I just was looking at the date and I was thinking, isn't this the date? Somebody said October 13th was the date for the big
I just
start of a big...
Googled October 13th crash. I'm not getting anything.
Okay. Well, either way, we're about even on the day right now, but we certainly...
Oh, Ed Corey says it was supposed to be October the 7th.
Oh, October the 7th. My mistake. Okay, maybe. Huh. Okay.
Now, who was saying that, Ed? And was there a reason behind it? We'll give him some time. Go ahead, Dave.
Yeah, absolutely. So really, today, to be honest with you, after seminars, I'm a little disoriented, and I've gotten myself pretty much back into the game here today. I spent some time here last night and really kind of ground through it. But I'm looking, we had 1986, 1985 as an important support level for today. They tested that level, and we're bouncing really quite nicely off that. However, I do have to say that if we stay below 1999, let's just say, and we are below that now, we messaged this out earlier, I think it's likely we're going to come back down a little later in the session if they can't get above 1999, and we're going to probably be retesting the 1986-85 level or perhaps lower later in today's session. Now, I'm saying that because this bounce is really at this point an advance in an existing downtrend, and we have some reason to believe that downtrend may not be over yet. So I'm not putting this out there directly as a real definitive forecast, but the failure at 99 has some implications in it. We got up to 98.50 today during this advance, has some implications in it for later today. And I think if they really are failing there, you're really going to end up seeing, roughly 87 to 85 back here a little bit later. So for intraday purposes, that's some food for thought there. And I think that's basically it. I think we have to consider that today's bounce is a bounce in a downtrend, and for us, the line in the sand, if you will, would be 99. They didn't quite get there, and I have to consider that as weakness, and that would normally, the implications of that, without even getting into more advanced work, the implications of that failure would bring us to a test of
now, when you say they didn't get to
85.
99, you're talking
in the rally that we just had here, just
okay.
in this.
I got you.
In this hour. Yeah.
I got you.
So, the intraday thing here. So, I
now,
think that's.
John B. asked, is the yearly top already in for 2015? He's talking S&P.
Yeah, and my answer to that is it likely is, but remember we haven't actually printed, I know he knows this, but we haven't printed the top yet, meaning that the end of the year comes and they print the bar. Mm-hmm. And so until they print the bar, we're still in the year 2015. We can't be absolutely certain about that. But my tendency is to believe that that is in, that we're not going to see all-time new highs. And I'm saying that in spite of the fact that we have a monthly and a quarterly, fourth quarter quarterly bottom that is in. Or no, the fourth quarter is not in yet. We're in the fourth quarter, but the monthly is. And the monthly is, obviously, that's a, that's a smaller time frame, and we're sort of being a little cautious with that because the real time frame that we'd be using is quarterly. And this is why I've suggested to people, again, and I want to say it, if your platform doesn't support quarterly, there's something wrong with your platform. There's just no real reason. There's no excuse for not being able to look at a quarterly chart. I mean, my goodness, every stock in the world is thought of in quarters. They think of it quarterly gains, quarterly results, quarterly financials, right? And yet you can't look at it on a quarter. Not you, but I mean, whoever you are.
Some charting platforms are geared more towards intraday traders. So, that
that's
may be
true.
Why they leave out the quarterly, I don't know.
I have a feeling that intraday traders would be benefited by knowing what the larger time frames are intimating as well. And I've seen over many years, a lot of platforms, and I'm still to this day, here we are in 2015, and we have platforms that still haven't figured out a lot of really obvious things, and these are the makers of these platforms. Sometimes you wonder what is going through their head, but I'm not going to degenerate into a platform session, but I'm really surprised that so many platforms don't offer the quarterly chart so that you can see what that viewpoint is, and why not? I mean, why is that absent when that same platform might offer you a yearly view? It's like, oh, okay, well, yearly's okay, but I can't see the quarterly, and quarterly is where every quarter the results are in. That's what the whole financial system's based on, is quarterly results. How are you doing? So I just don't understand that. Anyway, so with that, there's a few other things I'd like to say is that although the market sold off pretty well, we had multi-hour decline here, compressed multi-hour decline, there is some interesting stuff coming up into this weekend. In other words, maybe from Friday to Monday, there's a very important directional move. And if we're correct today about the failure at 99, indicating the comeback down to, this is again not really roadmap, but just what normally would be expected to happen, if they come back down and do 87 to 85 later in the session, which is what we're saying would happen, that leaves the door open for the market testing possibly some lower prices. It's not an outright forecast for it, but if they get to those lower prices, it's not a whole lot lower, and I'm going to, I'll give you the numbers. Might as well. I mean, this is not that big a deal. But this is not a forecast, so please do not trade this until you have your own signal to do this. But I'm only saying if the market does come down and do 87, 85 later in the session, which is what we would expect, then if the market continues further, I think any test between now and Friday of 78 down to as low as maybe 73 is going to be very, very important for this market. And if they firm up on that, we're going to be doing some long trading for a very specific distant target on the upside. And you can find all that out by coming to PageTrader and taking a trial or whatever, but I can't give it all out because I just gave it out this morning, so I want to be fair to the people who are subscribing. But so really how they handle the rest of the day is very important to us. How they treat the business of the failure at 99 and the decline to 87/85 later in the session, that will describe for us a lot of what will help us put together not only, I mean, that's a trade unto itself, but I mean really a much larger and more important trade. So I hope that's useful information. The S&P is really not for newcomers as far as we're concerned. This is a very sophisticated market, and you do have to know what you're doing, and you have to understand that you can't, if you're going to learn how to use stops and stuff like that, you have to get all that in before you practice it with the S&P. And I would say the same thing is true with the euro and the dollar, because both the euro and dollar are very spiky. They reach to extremes, and they can very easily stop you out, even if you are correct about an outlook. So you have to get stop placement down. And at least in our world, stop placement is never a fixed value. It's always conditional. It's always based on the set of conditions that the market is presenting to you. And I realize there's many other ways to do that, and many other people do it different ways. I'm just describing how we do it, because everything we do is conditional. And I think the more you view the market as a set of conditions to be solved, as opposed to just fixed way of just continuously doing something, I think you'll find that you at least can get to some deeper solutions for what the market is most likely to do. Now that's our take on the market, and that's what we do in our trading.
We give a fixed we give a fixed stop to people to help those who are new and who are, literally, and I don't mean this in a bad way, but they're clueless as to where a hard stop should be based upon the dynamics of the market. Now that's something, once they become engaged with us, then we can teach them how to read a chart and where proper stop placement would be based upon the dynamics of the market. But just coming in the door, we're just trying to keep them from shooting their foot off, kinda. And so that's our reason for leading in with a fixed hard stop. But I agree with you that those who are looking for a longer or a bigger swing type trade, multi-day trade, then you do need some flexibility with your stop. You have to have a hard stop, but if you're looking for something more than an intraday trade, then very much do I agree with your comment there. Question on the euro. Are you looking for a top in the euro this week from Ed W?
I could have guessed that was Ed W. I'm actually getting better at predicting who's asking the question.
Oh, that's good.
That's my better guess than actually the answer to their questions. I can say Ed W is asking. Let's take a look. We do currently have a position in the euro looking for higher prices, and we got those today. The euro did pull back sharply today after we took our initial profit and stopped the remainder of our position out at essentially a few ticks against our break even, and then we re-entered the euro again down at 114.41. We're up at 114.56, and we think higher prices are coming. I really made an error today in the. I mean, you can get stopped out in any position, but I made an error because this is the euro, and the euro has a real tendency to push back to levels that you might think they're through with, and so that was that happened. It didn't cost us any real money. We'd already gotten a gain, but we did feel that because the euro is likely to go higher, that we are, and so we are expecting higher prices. I'm not ready to consider a short position in the euro. I think we're going to see higher prices. We've given those numbers out, by the way. We're not just guessing at it. We've given the numbers out, and we're going to hold for those into the following days, following 2 days of this week here. So okay. I hope that's useful to you on the euro.
How about gold? What you got in gold?
Well, what we have in gold is a massive profit. That's what we have in gold right now. Gold is up at 1179. Yeah. We entered back on October 1st and October 2nd. We told everyone that that 1107 to 1110 was buying territory. And I don't mind telling you now that we're up here that our forecast going all the way back to September 9th so this is now more than a month ago, was that the market was going to bottom and it was going to move up to 1185 to 1190 or higher into November. And this is, I have to say, there's a little bit of seasonality, just a touch of seasonality in this, but we put everything together as best as we can, but we felt that was going to be the case. So we went long from September 15th and got some gains out of that. Then they pulled back and we were stopped out at profit with our remaining position. Then we went long again around October 1st and 2nd at 1107 to 11 probably 15, and today right now they're trading at 1180. So that's no small gain there. I think that's a pretty substantial move. We have about nearly 70 points worth of gain in this trade, and at this point, with us being this close to 85, I wouldn't be surprised if people wanted to exit this. There's a lot of human nature involved in how people deal with their open profits, and it's difficult to hold on. I don't mind people taking something off here or the remainder of their position, because honestly, we exited on the way up this whole trade. We're on our last third of our position. And losers, people who trade in the market but can't get it right, are always stuck in a particular mindset, which is that they never can appreciate what their own accomplishments are. They're always looking at what they weren't able to accomplish. And it's very dangerous thinking to do that in general, but it's also particularly dangerous in the markets. So as an example, it would be like, well, we thought the market was going to go higher, and I got, so let's say, the guy rallied up and he got 6 points out of the S&P, and the S&P moves another 12 points higher. What is a loser going to focus on? He's going to focus on, a loser meaning loser thinking, which results in loser actions. The guy may be a great guy, but if you think incorrectly, you're going to mess yourself up, and he's going to focus on what he didn't get. He's going to be mad, in fact, that he only got 6 points, as opposed to recognizing that 6 points is all he's good for right now. How do we know that? Because that's what he actually got. There's nothing wrong with that. And if you can just stay at your level and appreciate what your current skill set is, and stop one-upping yourself only after the fact. You don't one-up yourself in real time, do you? You only do it after the fact. When you already have information you didn't have before, now the market's up another 12 points against you or in your favor, then you jump in and say, now you're not even happy about your 6 points, you're actually angry about your 6 points. That is loser thinking. Right? I mean, so
yeah, no, I agree.
You want to. I realize you're laughing in concert with it, but my point is really this: is that this is a skill that you're learning, and by dissing your already accumulated gain, you got 6 points, you did it right. Why not understand that really is your level right now, if you're trying to go for these larger moves, and say that is my level, and those 12 points that isn't mine yet. What's mine is what I'm capable of actually getting, and get out of the theoretical and the abstract, and be happy that you got that 6 points, and appreciate that and grow that, because you're going to poison your own lake by coming back into the market on your next trade pissed off about your last winning trade. If you're going to be mad at a winning trade, then you're going to be mad at a losing trade. Well, and now you're just an angry trader, and you're just wrecking your own environment that you work in. So remember, we're not calling anybody specifically a name here, but I can assure you that there's a kind of thinking that produces losses and bad results. And this is one of the most egregious examples of it, which is that in advance, you don't know they're going to do that extra 12 points, but as soon as you do know it, you're really mad about the 6 points you just made. I mean, you're just fooling yourself. It's just a game with yourself. It's an echo chamber game inside your own head that you could have gotten something, but you didn't. So start appreciating what it is you can do, and think of it in terms of what it is actually in front of you. That's what you're capable of doing, period. And then stay with that, and then you'll grow that and you'll be happy about your trades. That positive, there really is something to being positive. There's no doubt about it. There is something to being positive. I don't mean stupid positive. I mean reality positive. You made yourself 6 points. You did the right thing. Don't let what the market did afterwards turn you into a junior high school one-upper, because that's all you're going to be. And I haven't met any junior high school one-uppers that have six-figure trading accounts.
It takes great discipline to leave money on the table on a daily basis.
Yeah.
However,
it does.
That's a great way to become or to build a great trading business, is by putting yourself in that position. Because if you're trying to milk the very last tick out of any trade, that usually doesn't end well. You would have been better
trade
off
to the numbers you know.
Yeah, there you go.
Trade to the numbers you know, and then increase that as your knowledge and understanding improves and stuff. And if you learn some new methodology or some new technique, test it, work with it, internalize it, and see if you can develop your skill to a higher level. So your higher level skill doesn't necessarily mean that you're going to be making more points. It's just what direction do you want to go. You can have a very high level skill like Michael X, and he makes relatively small number of points in the day, and he does it with large contracts. I think that's a very difficult thing, honestly, as well. I mean, especially at his level. But wherever you want to go with this, encourage yourself and be realistic with yourself, because it's unrealistic. It's just like a person in the gym thinking, he's lifting 50 pounds. Well, if you double that, it's unlikely he's going to be able to do that, and he can be really mad that he can only lift 50. Well, now he's completely destroyed all of the work he took to get up to 50, because he's mad that he can't do 100, and that's loser thinking. So stay with reality, and you'll find it works much better. So anyway, with regard to gold, we think, as I've been telling you guys over the last couple of weeks that we were talking about gold going higher. I didn't give you the numbers, but the numbers are 1185, 1190 as a minimum upside target for the market to get to coming into November. We're not always able to, but we were able to take good advantage of this. The market gave us several opportunities to get in and several re-entry opportunities and so on. So we're looking for somewhat higher prices, but I do think now that we're at 1180, we're probably going to send out a report that people that have their final exit, and we only have our final on. We didn't hold the whole thing. That's another loser thinking. You take your profits on the way up, and then you have your smallest position, at least in our work, when the market finishes its most distant target. You're holding your smallest position. And you take that off, and loser thinking is you jump right to, you say this. You say, well, gosh, if I would have held my hold position instead of getting out at target, right, I would have made this much money. Mm-hmm. Loser. I'm telling you, you got to get over that kind of thinking. It's the worst thing for you. You should be taking profits on the way up at known resistance levels, because the market can and may stop the move at that for some other reason, whatever, and you're doing the right thing. You'll never get the absolute best results, but over time you'll get the most consistency by doing it that way in trading. Any idiot can come after the fact and say, well, if I would have held on all my contracts instead of making, whatever his number is, let's say he made $10,000 on some move, he would have made 25. Well, God, and now he's mad about the 10 that he made, and next time he's going to load up and he's going to get in. He's not going to take them off at various levels. This is how people destroy trading accounts.
And the brass ring or the golden ring, whatever color the ring is these days, is consistency. To be able to do something on a consistent basis and get off of the emotional and financial roller coaster, the boom and bust syndrome. It's no good. Now, there's a question about bonds, but I want to show you. I did find this article. Ed gave me the date, and you brought it up. Two well-known financial forecasters claim that virtually all governments worldwide will be hit with a gigantic economic crisis in the first week of October 2015. Martin Armstrong is a controversial market analyst who correctly predicted the 87 crash. I don't really know about that. On the other hand, he was jailed for 11 years on allegations of contempt, fraud, and a Ponzi scheme. And now who's the second guy? The second guy is the one that Ed typed in his name. I guess it'll pop up here. Yeah, Edelson. Foundation for the Study of Cycles. Edelson's another longtime student of cycle theory. Edelson, a big fan. Armstrong has also studied decades of data. Blah, blah. Edelson is predicting the biggest financial crisis in world history, including a collapse of government solvency starting on October 7th, 2015, the same week as Armstrong's prediction when the European Union breaks up. Well, we're now 7 days into this, and the worst thing I have on my screen, I guess, is Walmart. But this is what you were referring to, right? When you
I think that's what I was
referring
to. I must have got the dates wrong, but it was right in that same time frame.
See, it was plus or minus 1 week, so you were right in there.
Oh, yeah, that works. Plus or minus 1 unit at a time is good.
There you go. Okay, next
we'll see. Go ahead.
Oh, I was just going to say the next question was on bonds, but go ahead.
I was just going to say we'll see how the market handles all of the behavior here and so on, and you have to give people a little leeway. They're calling for a specific thing and all that stuff, but I do want to say, and I will have to run shortly here, but I think people have to recognize, and the forecasters and so on, and I include myself in all this, is that if they're just simply looking back at previous data and saying this is what happened then, and therefore this is what we think is going to happen now, that's really on thin ice. That's really not going to cut it, and they're not going to come up with a lot of consistency again in their forecasting. The markets are much deeper than that. Life is bigger than that. If the markets are as big as life, you can't do that in ordinary life and say, on September 11th, 2000, we had a building got hit. So on September 11th of 2010, a building's going to get hit by planes, and it's going to get hit by planes again on September 11th, 2020. That's like what they're doing, if that's what they're doing. And I hope their analysis is deeper than that, because that's effectively what they're saying. So if they're doing it that way, and
I don't know. It has something to do with cycles, but I'm not familiar with either one of them or their work. So the question Maria had asked about bonds, and Han had asked about bonds. Can you ask David about bonds during the next couple of weeks or so? And I'm thinking
I am.
Go ahead.
I only have a minute left here, and I will be able to answer this a little better tomorrow. But first of all, I'm just delighted that bonds are still up here. They're having a wonderful day up today. Yeah. We had a forecast, and this is a little bit of a surprise to us. We had forecast that the week of October 12th would mark a very important bottom for bonds for a sizable advance, much bigger than what we're seeing so far. But this is the week of October 12th. The bottom would have come last week, and it really doesn't appear as a bottom really on like the weekly chart or on the 3-day chart or whatever. I don't really have a firm forecast right now at the bond market. One thing I've learned, and then I will have to go, is that it's as equally as important as it is for you to know what it is that you know, to have a very good working knowledge of what you know and to test yourself on that from time to time, which is, I think, very important because you tend to forget things over time. It's also equally important to know what you do not know and test yourself on that from time to time as well, seriously. Because what you don't know, if you're on top of what you don't know, you won't tend to make silly moves in the market because you really don't know, and you won't be acting on that kind of weak basis. But when you do know what you do know, you'll tend to act on that better. So make a clear distinction. You can make a piece of paper, draw a line down on the one side, what it is I don't know, and make sure you keep a notes of that, and what it is I do know about markets and how they work and so on. And that will keep you from acting improperly when it is something you don't know. And right now, I'm not real clear on the bonds, and I know that I don't know, and so I leave it off until I have a much clearer thing. Our consistency, if I can speak about it in these terms, is a result of acting when we know that we know. And that is what makes the market consistent if you've watched our work. Inconsistency is when you're shuttling back and forth between sometimes not knowing but still trading, and sometimes knowing that you know something in trading, and you mix it all up. Pick one side or the other. If you want to be a good, consistent loser, trade when you don't know, and you'll be really consistent at it. If you want to be a winner, trade when you do know, and only do that. Don't mix them up. That's my show. Good night, Dwayne. I do have to run, and I'll be back with you tomorrow. Thanks for having me on.
Sounds good.
See you then.
Take care.
Okay, see you then.
See you later. All right. Okay. I'm sending an email right now. I just got an email. Jim Whitebar Cox our Wednesday co-host, he says, Dwayne, I am really under the weather. However, he's a trooper. Pun intended, you know, retired homicide trooper, state trooper. All right, never mind. I'm a little under the weather today. I can make the show if you really need me, but if possible, I'd rather pass. Jim, you get a pass, okay? This is the first time you've ever not been able to make it on a Wednesday. And so, by golly, you get some rest and feel better if you want. Now, I'm sending him an email that says if you want, we can do Friday, or we could just wait until next Wednesday. Let me know. And you're probably listening in, or just let me know. So anyway, officially off the hook. Note from the teacher. Go home, drink lots of fluids. Sorry, Jim, I just saw this. Hope you feel better. If you want to wait, we can do Friday, or just wait till next Wednesday. Let me know. Okay, boom. All right. So, I was looking for him. Where is this guy? Because he's always very dependable. So, all right. Now, let us go back to where we were on the recap. Okay. S&P, we already covered that. No big deal there. Bonds. Love it. Crude oil. Yeah. You know, we had some really great days, and then we had, just a day where we didn't quite nail it, as they say. 2 days back, we had a $2,000 drop. Now, does that mean you should make $2,000 off of that trade? Just very thing David was just talking about. People who took this trade based off the Concierge Trade Alert, they're like, man, I'm such a knucklehead. Why did I just take 10 ticks and get out? Why did I get out at the close of the hour? You know, why did I let myself get stopped out on this pullback, you know, and I could have made, you know, don't do that to yourself. So everything David said, I just agree. Yesterday, well, two-sided action in crude. You could trade it short, long, short. There was plenty to go around. Now, actually, 47.30. What was the swing low here? 44. See, if we had gotten down to 30, just a few more pennies, we'd have gotten there. That would have been $1,000 per contract. A $1 change in the price of gold is $100 of profit on a trade per contract. A $1 change in the price of crude oil is $1,000 per contract. Crude oil has 100 ticks to the dollar. Gold has 10 ticks to the dollar. They both pay $10 per tick. So you might say, well, what's the difference in margins? Let's find out. I'll tell you the exact, because they change them from time to time, so let's get the absolute latest. And for those of you that are on DT Pro, in case you don't know, the way you find out such things, go to Help. You got your user's guide. That's like a 900-page PDF. Trading hours, contract margins, contract specifications. Okay? So, by clicking margins, what it's going to do is it's going to open a tab on my browser. And I'll show you what that looks like. Right here. Margin requirements. So we're going to go down to, we'll go to crude oil first. Okay. GCL, this is the contract that we trade. See, GCLX5, okay? All right. The full margin is 5,060. The intraday margin is 2,530. Now that's a confusing term. The intraday, not the 2,530. I'm trying to write with a pen that just fell apart. Okay, let's see if we can make it work again. I want to write that number down. Well, I'm not going to write it with that pen. So, am I really out of pens? In this high-tech world in which we live in, it's amazing to run out of pens. Okay, that one's not going to work. That dog won't hunt. 2,530. Okay, I managed to actually write something down without a keyboard. All right, so 2530. Now, tonight at 6 p.m. Eastern, that will begin the Thursday session. Yes, I know it will still be Wednesday, but it will be the Thursday session, and it will be considered the day session. Go figure. What I'm saying is, if you put on a position in crude oil right now, and you leave that position open, right now your margin's going to be 25.30. But when the market closes this afternoon to only reopen an hour later, okay, if you hold that position over just that 1 hour of time, you're going to go from this to this. If you close your position before the market closes, 1 minute before, and then as soon as the market reopens an hour later, put the position back on, your margin remains at this. And you go, well, yeah, but I had to pay double commissions. Okay, that's the trade-off. And it really has to do with a matter of your account size, okay? If your account size can handle the additional margin, then it's not an issue. What you want to do is you want to avoid the margin call, okay? Because the margin call puts you in the penalty box, and you don't get to play the next day. You have to sit out the whole trading session if you get a margin call. I don't know that every broker does that, but I've seen it happen a few places. So check with your broker, see how it's handled, but just be aware of what the margins are, what's in your account. You know, maybe you've got 2 contracts on, and so you got to drop one of them so that it won't affect your, you know what I'm saying? You just be aware. Talk to your broker. And if you have a question about margins and how all that works, call Bert or Leslie, toll free, 866-928-3310. They can answer all of your questions, and you say, well, yeah, but I don't have an account with them. That's okay. They will treat you as if you did. They will treat you like you got a gazillion dollars on deposit with them, and you're making 100 trades a day. They treat everybody the same, which is kind of a nice way of doing business, right? So if you're the heavy hitter with the big bucks, or you're the guy just trying to get started, you've got the minimum amount to open an account with. You get treated with dignity and respect, and you have access to their years of knowledge and expertise in the markets. So that's a sweet deal. And they'll still help you even if you don't have an account with them yet. Why? Well, they're going to do everything they can to earn your business. And if they earn your business, they're going to do everything they can to keep your business. So that's unlike, see, most brokers understand the sad statistics that only 90% of those who want to become traders actually make it beyond their first year. And so a lot of brokers, you know, they'll be nice and friendly with you, of course, when you call, when you can get them on the phone, if you can get them on the phone. But you get your account open, and then they just kind of sit back and just see, you know, do you know anything or not? They can tell by how you trade and what kind of results you get. And if they see that you're a savvy guy and that you know what you're doing, well, then they'll come swooping in, you know. But if you're just a guy floundering around, they don't have time for that, because they know you're going to blow up and blow out. They're looking for that next whale, okay? Bert and Leslie look at it completely different. Okay? When they see you, the new guy who's just trying to learn, and maybe you can only open that minimum account right now. In fact, you're opening with the minimum balance because you simply need unlimited access to the simulator so that you can start practicing, so that you can learn the mechanics, learn our methodology, and then ultimately go live with one contract and earn enough money in the market to add a second contract. They support that business model. They understand it, and they're there for you, okay? So give them a call with any questions you have, whether it's margins or whatever it might be. 866-928-3310. If you open an account with them, we don't get any kind of a finder's fee. We don't get a split of the commissions. Nothing illegal with that. Michael and I just chose not to do it because we wanted to be able to tell you that they're the best in the business because we really believe they're the best in the business, not because we're getting paid to tell you that. So we know now that the intraday margin is $2,530 for crude oil. Okay? And so that's what you would have had to put up to partake in this move, or this move, or this move, or this move, or this little whimper of a move. Okay? Gold. We said we would compare that to gold because we've had some really nice $1,000 a day moves in gold. So, go to metals. And we need to get down to the one that we trade. Where is it? Right here. GGC. So, 41.25 is the full margin. Intraday, $2,062.50. So, crude oil was $2,530 intraday, and gold $2,062.50. Now, just because you're putting that margin up, remember, we always teach you to use a hard stop. If you are following the 2420 blueprint, which is designed to take you from one contract to 20 contracts in 24 months, you'll never risk more than 8 ticks on any one trade. Bonds, you'll only risk 4. Okay? That's probably another good one to take a look at the let's look at the 30-year bond margin. What happened to my menu? Hang on. Let me just reload the page. There we go. Okay. So here we go. Here's the bonds. Because we've had a lot of $1,000 days in the bonds. Okay. We want the 30-year U.S. Treasury ZB. Okay, that one's a little less expensive. $37.40 if you're going to hold it from one session to the next. $1,870 intraday. So tonight, when the markets reopen, 6 p.m. Eastern, if you put on a trade with bonds, even though it's dark outside, you're going to get charged the day margin, $18.70. Okay? The only time you have to pay this is if you hold it from, see, right now we're in the Wednesday session, but when we reopen tonight at 6 p.m. Eastern, that becomes the Thursday session, and that's the difference, okay? All right. So we covered gold, we covered crude oil, we covered bonds. So you've had some really tremendous moves in all of those markets. And again, the way you get to that page I was just on, if you're using DT Pro, whether you're using the demo or the live, works the same. Go to help, Contract margins. This is your user's guide. If you've never had a look at this and you're new to the DT Pro platform, this will answer so many questions. And yeah, I mean, you can fumble around and figure out how to do things, but this is 900 pages of pure PDF goodness, and it will help you. Okay, so if you've never looked at that, check it out. All right, so that's crude. We covered that. All right, the euro. Our alert last night said to consider being long above 11,415. In the first hour, we pushed up 22 ticks. Now, the euro pays $12.50 per tick. The euro, soybeans, and the S&P are $12.50 per tick. So you need 8 ticks to hit that $100 per contract per day mark. That's if you're trading the blueprint, and that's your goal. $100 per contract per day. You need 8 ticks. This move gave us 22. And then there was some back and forth. We got below and we got back above. On this little move here, well, even on this little move here, we had a high of 24. So 15 and 8 would be 23. Here we had a high of 24. And here we had a high of 23. Okay. Then we had the big move, which ran up 48 ticks. And 48 times 1250 is $600 per contract. Okay. Now, once again, we don't have a mechanism to get you out at the exact swing high or swing low. I don't think anybody does. There's a number of ways to try to figure out, where a good position might be. And you could use the Fibonacci price extensions. I've shown you how to use those on the show before. If you become a partner, I'm happy to work with you in depth on applying those so that you become handy with them. All right. Soybeans. Last night, the Concierge Trade Alert for soybeans said consider being long above 914. Now, yesterday we hit the big bean number. Okay. We hit the big bean number. Previously, the big bean number was 908. We hit it, and now we're at the new big bean number on the upside is 932. But last night, long above 914, short below 910. Okay, so on the long side, we need 2 pennies out of soybeans. That's 8 ticks, just like the S&P. $12.50 a tick, 8 ticks, it's $100 per contract. So 914 to 916, that's 2 pennies. The actual swing high was 1975. So it came within 1 tick of being 6 cents, or the equivalent of 6 points in the S&P. Then price came back below, did the deal, tested, and didn't quite make 2 cents. Instead of 8 ticks, it gave up 7 here. At this point, hopefully you had your points for the day, and so you didn't have to fool with this. But this is the reality. This is the truth about trading. This is what happened. Now, the short side on beans said to consider being short below 910. Okay, here's 910. Now, this price here, 2200. We got the alerts out last night. Yes, so this was out. Okay, so this initial move here only dropped 1 tick. 1. What was in the previous hour? Yeah, okay. This is 2100. So that would be 12 and 7 is 19. Okay, so we sent the alerts out. The timestamp on the email or on the Alert is 7:45, but I think there was a hang up, and I think they went out. If you check your inbox, I think you'll see 8:30 Eastern is when it actually got into your inbox. And so let's call it 2100 hours. Okay. And so if that's the case, see, beans stop here at 1400 and then they reopen at 2000. Okay. So if you got the alert by 2000, okay, then the swing low here was 909 and a quarter. So that's, if you're trying to get short below 910, that still only gives you, 3 ticks. And this gives you 1 tick. Neither one of them is enough movement to take your stop to break even. We take our stop to break even at 4 ticks. Okay? And then, now, once you get warned about an area, then you want to tread carefully when you approach that area again. Because look what happened. Double bottom. Support and resistance. I mean, it's not broke. See the low? See the low? Support and resistance, repeat after me, is not broke. Okay? I know there's fancy, sophisticated ways that we don't all understand of how to peg markets and do different things. Just remember that some of the oldest stuff is still some of the best stuff. We don't do head and shoulders. We don't do those types of patterns, but there's certainly nothing wrong with them. Do they still work as well today as they worked back in the day when whoever figured all that out? If you go get some of the old books on technical analysis, does that stuff, now that we're in the world of computerized trading and we have electronic charts and we can draw this stuff in a nanosecond and a lot of it will even draw itself automatically. But does the basic concept, the precept, does it still hold true today, till today? Yeah. And will it tomorrow? Yeah. It's kind of like our methodology. You hear this a lot, that certain systems and methodologies, and especially these robots and these algorithms and these quant traders, that they'll work for a while and then they'll stop working because the market conditions change. So that's why Michael and I, we specifically set out to build something that's not going to break. Okay? It's not going to stop working. Because our methodology seeks out and finds the underlying rhythm of the market. It embraces the underlying rhythm of the market, any time frame. You're never going to catch a top or a bottom with us, but what you will have an opportunity to do is to take a bite out of the middle between the top and the bottom, or the bottom and the top. Okay? Our indicators clearly define when the turn has been made. Okay? We can look at our chart. You can see, once you've been with us a couple weeks, you should be able to sit in front of a chart. I bring you into the room blindfolded, spin you around 3 times, disorient you, set you down, pull off your blindfold, you look at a chart. You don't need to know what market it is. You don't need to know what time it is. You don't even need to be able to see the prices. But if our indicator set is overlaid on it, you'll go, oh wow, whatever market this is, I don't know if it's wheat or gold or the peso, but I can see that it's clearly setting up for a long trade. We've had a bullish cross, price pulled away, price pulled back. If I can just get an up close on this candle, whatever time frame this is, I don't know if I'm looking at a 1 minute, a daily, or a weekly chart. So all I know is if I get an up close on this candle, then according to the rules, I just buy the open of the next candle. Period. Trading's not easy, but it can be simple. Okay? But we have to let it be simple. We have to be willing to let it be simple. And our minds don't want to do that. We want to complicate it. We want to confirm it. We want another filter. We want another layer. We want to do something, some way, somehow, no matter what it costs. We just want to make sure we're never wrong again. We just want to be right. Got to get that out of your head. It's not possible. Okay? If you fly an airplane for a living, yes, you got to get it right every time. Takeoff, landing, you got to nail it. If you're a doctor, you're a surgeon, you're a dentist, you're an engineer, you're a nuclear physicist, no room for error. But the best trader on the best day will be profitable on 7 out of 10 trades. Why? Why is that? Why can't traders learn to nail it 10 out of 10? Well, because you're dealing with a set of ever-changing variables. See, when the pilot's coming down, think about this. The pilot's coming down for a landing, right? And all of a sudden, the runway moves. What? Yeah, there'd be some crash and burn there, right? Or the surgeon goes in to do some kind of surgery in your body or in your brain, and he opens you up and he goes, wait a minute, where's the liver? Where's the kidney? Kidney's supposed to be right here, but it's been moved. Now it's over there. Oh my goodness, he opened you up in the wrong place. Now you got to sew you back up, open you up over there. That's the thing about the markets. It's dynamic. It's ever changing. That's why we had to build something that could go in and embrace the underlying rhythm of the market so that it won't break, it won't fall down, but you will get stopped out. All traders do. You don't have, and the infamous words, or just the famous words, the wise words of the late, great Mark Douglas. He said, you don't have to know what's going to happen next to make money in the markets. Say that again. You don't have to know what's going to happen next to make money in the markets. You simply have to know what you're going to do. As long as you know what you're going to do, based upon whatever the market does do, you'll be okay. You'll never be 10 out of 10. On some crazy lucky day, maybe you will be. Okay? But that's not reality. That's not the consistent, repeatable behavior. And that's what you're seeking, is you're seeking consistent profitability. That's if you want to be a quote-unquote professional trader. And what is a professional trader? Google. Define professional trader. You don't have to do it right now, but if you really want to know what my thoughts are, then by Googling define professional trader, you should see me right if there's some ads, but it'll be right below the ads. Article I wrote years ago. It has nothing to do with your account size, by the way. So that should pique your interest if you've never read the article. All right, so price triggers 914, runs up, hits almost 920. So we have almost a 6-cent move, but we only need 2 cents. And then on the downside, it was a little wonky. Okay, but it's coming down again. Okay, but as I just said, I would exercise caution because, 2 times in a row here. Now, this low and this low was put in. See, we closed here, opened here, made 1 tick down, and reversed and ran back up. If I were going to consider trading this on the short side, on a break of 910, okay, I would have my 4-tick range chart out, not a 4-tick chart, but my range chart, the one Michael uses every day in the live trading room, and I would be looking for a trade setup. You need a bearish cross, you need price to pull away, you need price to pull back, you need a down close. Do I have such an animal? I don't know if I do or not. Okay. So let's go for tick range. And let's go to ZS X5. Okay. Now, this is that thing I was talking to you about earlier. If you're a partner, you haven't been in the partners meeting the last couple of weeks, you need to go watch those workshops, okay? I've been showing you how to use just the CFMA1 if you want to, okay? And complement it with the slingshot. See, when this candle here opens, and I look down here, I know exactly what I want to do. I want to be long, okay? And when this candle right here opens, I know I want to be short. I know that I want to sell 917.75. If I do that, I can take my 2 pennies at 915.75, which would be right there. Okay? I mean, trading's not easy, but it can be simple. On this candle right here, I know that I want to buy the open of that candle. It opened at 912.5. I had a drawdown to 911.75, 3 ticks, and then done for the day. Okay? All right. If you're not a partner, let's go back to, okay. So we're talking about the 910, all right? As we were approaching 910, where would we have wanted to get short? We would have wanted to get short on this candle right here. The open of this candle was 911.75. Yeah, but I thought the trigger was 10. Well, it is. What I'm trying to show you is a way to trade. You know, you got to think, and in other words, so rather than waiting for 910, because you know that the last time you got to 910, it only dropped 3 ticks. So this is going to give you an early entry, all right? So you're going to get in at the open of this candle, which is 911.75. So that means you need to get down to 909.75, which is right there. Here, let me draw a line. Okay. You know you've got a Concierge Trade Alert trigger at 910. You know that it's been finicky each time it was approached today, and so you want to use some caution. And so getting in on the open of this candle at 911.75, that allows you to take your profit, your 2 penny profit, at 909.75, right? And so if this is as far as it goes, that's okay, because you got your 2 pennies. Now what I just showed you, if you're out there struggling, and you've been through all these different programs and these different systems and these different classes, and man, you're just frustrated and fed up and aggravated and had it, you know, why don't you come let us help you? We'll give you 5 days free trial. You get to use our indicators, our strategy. You can get one-on-one mentoring. If you've already done that, then you're going to get an email today. If you've been on the free trial for the past week, you're going to get an email today from Michael that will tell you what it takes to become a partner. I wrote last night about Here, let me show you, because some of you may not know how to get here. This is our Google Plus page. This is where every day we post the radio show. Yesterday's radio show's here. And I posted some other stuff last night too. We have the tools and knowledge to put you on the path. Don't let the discounted price fool you, because I had mentioned up here that we have a very nice discount this week, and our current special puts you not only on the concierge list, but in the live trading room as well with Master Trader Michael. So whatever your goal, just looking for a job, want to build a career, want to grow a business, want to leave a legacy, we have the tools and the knowledge to put you on the path. Don't let the discounted price fool you. See, there's some people that charge $10,000 for a whole lot less than what we offer at our discounted price. And so there's something in our brain that says, oh, well, if that one costs 10 grand, it must be better. Well, I don't know, maybe it is, maybe it isn't. I don't know. There's an old saying, well, you get what you pay for. Unfortunately, that's not always true. See, just because you pay more doesn't mean you're going to get more. Sir Richard Branson owns an island valued at $200 million. Purchase price, $180,000. Now, the British Lord so-and-so, British guy, who owned that island, he wanted $5 million. Branson offered him $100,000. And the guy was so insulted, he threw him off the island, right? And so Branson came back with another offer, and another offer, and another offer. He knew the guy needed the cash, and he finally got it for $180,000. Now, this is how our minds work. When this guy drops his price from $5 million to $180,000, some of us, the first thing is going to go, oh boy, what's wrong with this island? It must be faulty. It's radioactive. There's a hole in the bottom. Something, right? Because there's no way I could buy $5 million. I can't buy something worth $5 million, or actually now $200 million for $180,000. Well, he did, right? And so the parallel I'm trying to draw here is the knowledge and tools that you get when you become a partner. Yes, we've put a price tag on what we charge you for the knowledge and for the tools, but only you will be able to establish the true value of all that. Because if you put it up on the shelf and do nothing with it, that has very little value. You could consider that money wasted, right? If, on the other hand, you get in there and buckle down and work and learn, and again, trading's not easy, but it can be simple. You don't have to learn 50 different things. The recipe that we have for the slingshot trade's got 5 ingredients that never change. You don't have to go look at an advanced decline chart. You don't have to look at the trend or the tick or the any. And not that there's anything wrong with those things. Those things are all perfectly great tools, and they work and do the jobs they were created to do. But do you need an elephant gun when you're squirrel hunting? And, well, let's just leave it at that. Okay. Now, how do you get here to this Google Plus page, which has hundreds of hours of video content? Go to CFRN.net, and where it says Emini Radio Blog, click that. And where it says Watch Recent Broadcast, click that. And there you are. And there's yesterday's radio show. Right there. All you gotta do is click it and go. And today's radio show, because I'm getting ready to sign off here in a few minutes, will be on the Google Plus page in about an hour. Okay? So, that was soybeans. We've already covered... We haven't covered the Dow. So let's take a look at the Dow. On the long side, not much. What was the swing high? 170.17, so it went up 7 ticks. So it did give you room to get your stop to break even. But that's about it. That's if you're trading the 2420 blueprint. The thing I may not have fully explained about... See, yesterday we hit the big bean target. The trigger was 890. The big bean number was 908. So that's 18 cents just from here to here. $900 per contract. But it kept going. So soybeans actually did $1,000 plus per contract yesterday. Okay? And so now we've established a new big bean number. So each day you have the intermediate level, like here, 914. Go get your points for the day. But if you're trading for a larger target, currently the big bean number is 932 on the upside. Okay? All right. Okay, so the Dow, the short side of the Dow was 16,800. We haven't even got there yet. So, break even at best up here, and the short side is working its way down, but it hasn't triggered yet. Okay, which makes me want to pop back over and look at the ES again. Yeah, see, that thing's triggering again too. Okay, so far it's got down to 66.50. Now, how many times today did it do that? Once, twice. Now it's doing it a third time. Okay. All right. The Russell. We said to be long above 1145. How much do you need with the Russell to get your goal for the day? 1 point. The S&P pays $50 a point. The Russell pays $100 per point. And so you need to see 1146. The swing high on this candle was 45.70, but it continued into this candle, which actually put in a swing high up at 47.20, and the swing high of the day has been 51.90, and so that's $590 per contract, 59 ticks from here to here. Again, we can't get you out at the top to the tick. We can teach you how to put a hard target out there. We can teach you how to trail your stop. But then you have to be disciplined and actually do that and follow through. If you look on the Google Plus page, I gave some instructions last night. Initial target, second target, final target. Okay. Consider being short below 1140. And we've hit, in the first hour that we triggered on the short side, we got down to 37.50. So that's $2.50 or $2.50. Okay. So that's 25 ticks. $250 per contract. Then important prices, important areas. So we go back, get above the trigger, down we go again, and the swing low here was 1134.70. So that's 53 ticks. And then we trigger again on the long side, and that's 20 ticks from 1145 to 1147. That's double your daily goal in that little wick right there. Okay. And now we've just triggered again on the short side. And it's already got down to 38. And so we just did another 2 points on the downside on the Russell. And remember, you only need 1 point to be done for the day. The first move, the first trigger of the day only went 5 ticks. At 4 ticks, you move your stop to break even. Then you had all that. Okay. And we've already covered gold pretty much in depth. The first trigger last night went 4.5 points. That's $450 per contract. Then we triggered on the short side, 22 ticks, $220 per contract. We had a couple smaller moves. Then we had a $350 per contract move. Then the big move of the day, which took us from 1170 to 1180. That's $10. Remember, $1 in gold is $100 profit or loss, depending upon which side of the trade you're on. Now, if we get up to 1190, that will be a $2,000 per contract day. We're not there yet. So far, the swing high is 1188.40. So we've done $1,800 so far. That's if you stayed with it, if you trailed your stop, if you're, a very experienced trader, and you know how to do that. That's what the market has made available. If you're trading the 2420 blueprint, what do you need? 10 ticks. See this 4.5 points? That's 45 ticks. That's 22 ticks. That's 35 ticks. That's 100 ticks. Got it? It's 180 ticks. Got it? All right. So that's the deal. What a great day. Like I wrote yesterday, Inside Futures. I was commenting on the volatility of the S&P, or the lack of it, yesterday. And I think the title was Horton Hears a Valahoo. And it's just a short article with a couple of charts talking about volatility and how it is a gift, and we should, make hay while the sun shines, etc. And we should. All right. So I'll leave you with this chart. Now, this was the range we were in yesterday, and we talked about that. And that's kind of what spurred me to go write the article. And I said yesterday, now how will we know when we're out of the range? I said, well, because we'll pop out of the range. And when we come back up into it, if we come back up into it, we'll immediately come right back out of it. And so that's what we did. Leg, a retrace, and a leg, and a retrace. Now we're putting in another leg. Now what will happen after this leg is we'll get a retracement. Question is it going to be an ordinary retracement? Is it going to be a deeper retracement? Or will it be the beginning of a reversal? Okay? Come be a partner. We'll teach you how to know the difference. When you know the difference between a deeper retracement and a reversal, when you're able to pinpoint that on a chart and go, okay, right there. If it goes beyond that number, then, now, the market can always do whatever the market wants to do. It's bigger and faster and taller and more handsome and has deeper pockets than all of us put together. However, remember, the best trader on the best day can be profitable 7 times out of 10. Knowing something like when a deeper retracement just became a reversal, that's powerful knowledge, okay? Can't get rich overnight. Well, I guess you can if you hit the lottery or something, but if you want to build a business, we can help with that. We don't sell lottery tickets, but we can help you build a business if that's what you're looking to do. All right. Do I have any unanswered questions? Okay. What if I am afraid to pull the trigger to enter with real money? How do I deal with that? Okay. Well, you're only risking $100 per contract. If you're having an issue with pulling the trigger, in other words, if you're not emotionally ready to risk $100, then it's good that you recognize that, because you're not ready to trade real money. Okay? Could be that you're undercapitalized. I don't know what your account balance is. I don't need to know. But you need to have an account balance of a size where if you lose $100, you can take it in stride. It's no big deal. You know it's just another trade. It doesn't define who you are as a trader or as a man or anything else. No one trade will ever define you, nor 1 week or even a month or a year. I mean, there'll be, it's the cycle of life. There'll be lean years and there'll be fat years and all in between. So think about what's at risk. Okay, if you're not willing to accept $100 risk, you got to go back into the simulator. Well, obviously you're still in the simulator. You got to figure out why. Okay, if you've put together 10 days, here's how you go live. You make $100 per contract per day in 10 trades or less, 10 days in a row. You make $100 in the simulator, $100 per contract in 10 trades or less, 10 days in a row. It's impossible to do that by luck. You must have a skill set to put together 10 back-to-back days of $100 in 10 trades or less. That is designed right there to make the fear go away. Okay? So I have to believe if you've already done that part, okay, if you've already accomplished that, and you still have hesitancy, it's probably because you're a little undercapitalized, and so you should just continue to sim trade until you can save up another couple thousand, whatever it takes, so that when you put the trade on, you're able to focus on the trade and not the money. Dick Diamond, I bring this up all the time. Dick Diamond, very famous trader, teacher, mentor, used to give a lot of seminars. If you've been around trading for a while, you've heard the name Dick Diamond. In an interview that I heard, the guy doing the interview said, "Hey Dick, let me get personal. You trade the S&P. How many contracts?" And Dick's answer was 10. And the guy goes, "Oh," I think he said, "Oh, you mean 10 of the large?" And he's like, "No, 10 E-minis." And the guy's like, "Well, I don't understand. You're Dick Diamond. I mean, you teach, you train, you do seminars." Dick said, "Yeah." He goes, "And I have the money to trade more than 10 contracts, but for some reason, whenever I go over 10, my mind shifts away from the trade to the money." And he says, as long as I'm focusing on the money and not the trade, I can't do my best work. And so 10 is just a comfortable spot for me, and so that's what I do. I trade 10 contracts, and I make a very nice living. So, but you've got to get started. You've got to get live. So in answer to your question, make sure you've put together have you put together your 10 days back-to-back? I mean, if you haven't done that, then you shouldn't be going live. Okay, we'll see right there. That's the hitch in the giddy up. You should, and please don't go live until you put together 10 days in a row where you make $100 in 10 trades or less. Now the rollover trades, they count. Any trade that you don't use today rolls over to tomorrow. and they just keep rolling forward. It's like a snowball going downhill. It just keeps getting bigger and bigger and bigger. You have all those rollover trades to work with, and you have rollover percentages. For instance, if you put on a trade today, and say you're trading in a market that requires 10 ticks. So you get stopped out on your first trade with 3 ticks. Okay? Then on the second trade, you get stopped out with 4 ticks. Okay? Well, that's 70% of your daily goal right there in 2 trades. And then on the next trade, you actually hit your 10-tick target. Wow. You have now earned 170% of your daily goal, and you did it in 3 trades. So you're rolling forward 7 unused trades, and you're rolling forward 70% of 1 day's production. That's how you put together your 10 days back to back, because that's how you're going to trade it in the real world. So forget about the money for now. Focus on getting those 10 days back to back, and you'll be just fine. Okay? All right, guys, I got to go. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.